What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do provide weekly updates each and every week to get you prepared for the week ahead. And eventually, I'll go to start making some additional videos here soon, shortly, on some current events as we continue throughout the remainder of the year. So before we get started, remember to like the video so that way we can get out and spread the message about what's currently going on and kind of get rid of a lot of fluff that is currently out there and kind of go straight towards the facts, kind of see what we are seeing on a day-to-day basis. Again, I like to bring that approach that I want to know what the next steps are in a short window. I don't want to know what's really going on 6 months from now, as the market is very dynamic and it can change very quickly, especially within a few minutes to an hour of the market being open. So you have to realize that and be adjustable in any market that you are in, especially the stock market, because we do know that it is quite emotional. So let's go ahead and throw this up. Something I have seen and always talk about each and every earnings cycle is it gives us great insight into what is actually going on. And something I talk about, I'm not one of these people who like to come out and start talking on, potential thoughts and ideas that are non-existent. I like to try to state facts and add some theory to what I believe is going on, especially involved in the current events that are going on, whether that's the economic calendar or whether that is what is currently going on with the earnings cycle and some events that are going on just in general that aren't scheduled. So with that being said, we have seen a lot of exposure. You have one perspective. The administration has essentially been telling you, media has been telling you that strong and resilient, that things are fine and dandy. And yet we've had another earnings cycle where that has been false. There are some strengths, but the vast majority of things are extremely weak. And something I've talked about is that, we do have, when you're talking about inflation, I think some inflation is coming down, yes, because people can only afford the basic necessities at this point. They can't afford to go out and be blowing money, especially with student loans coming around the corner. And again, people are getting some relief there, but understand that to even qualify to get any kind of student debt relief, you essentially have to have that debt for like 25 years and you have to have not missed a payment. So it condenses the people that are actually getting relief there. But again, Biden had to do something because that was his promise going into office. Nonetheless, I don't want to get into politics. It is what it is. That's what's currently going on. So that is right around the corner. People can't afford. VP Harris has come out and straight said that people can't afford a $400 payment on top of everything that they're currently doing. So student loan debt is going to be nasty. And what I talk about, the next series of events that are going to occur over the next couple of weeks are going to be very detrimental and definitely going to be able to price in what I believe could be a recession move to the downside that could essentially lead to a bigger boom in the stock market, not the economy. I think our economy is going to be suffering for the next potential couple of years, especially with the rates. We're going to, again, that's something adjustable. We'll base our decision on that based off of rates. So with that being said, we also have the core and inflation, something that we've talked about that I've kind of moved on from. Yes, the inflation is still a problem, and I hope it does not get worse, because if it gets worse, everything that we see now is going to get 10 times worse than it already is. So with that being said, we will have to see what essentially is going to happen over the next couple months. Because again, there's a lot of stuff going on, and I've again moved on from inflation and more focusing on the interest rates, monetary policy, as we are starting to see the impacts of what that does to an economy when they are trying to when they're doing their quantitative tightening cycles. And so, with that being said, let's get into the weekly recap now. Again, this past week has been very, very interesting, as we have seen that you can't just come out and say that things are okay. And then you get numbers like we're getting that expose essentially the truth on what's actually happening in the market. So, with that being said, over the past week, we have a big series of events. On Sunday, you had Yellow Freight that came out and said they stopped essentially processing what was going on. There was kind of like a standstill last Sunday, and then come to find out that on Monday that they are declaring bankruptcy and dropping 30K layoffs of people. Now, this is partially due because of the lockdowns that have occurred back during the pandemic. Obviously, they suffered a lot. They had to get a bailout for $700 million. And then what ultimately occurred is something I've been talking about with these interest rates. Now that these essentially these interest rates have come to maturity and they need to re-up them, they have $1 billion loan that they can't pay for now, and so now they have to file bankruptcy because of the high interest rates. And so now that's led them to claim bankruptcy and let go of 30,000 employees. And with that being said, we also have CVS coming out and dropping 5,000 employees themselves. And so you're starting to see the impact of these loans coming to maturity, and they can't afford the new loans. So again, the easiest fat to cut to still remain profitable is to start cutting employees first, and then try to deal with a bare bones skeleton crew to hopefully get you through. And so that's what we're seeing. We saw that first big wave come through with tech. Now it's starting to hit other industries, and that is what's important here. And then also this past week, we've essentially had Apple and Amazon earnings. Amazon came out. They did actually very well in some aspects, and ultimately understand that. I think more so playing into that, why Amazon did so good is because that, people are trying to save money, and if they don't have to go out and buy anything, they would much rather stay home and purchase it on Amazon, as they can save money. People are at the point to where they're doing anything that they can to save money. Not long ago, I talked about an article that I was reading that a family, it was essentially they were intermittent fasting because they couldn't afford the food bill anymore. So they were trying to save money by fasting. And so these are the things that people are starting to do. Right, when the money is easily flowing, you don't think about these things because you're not worried about the money. But when you start worrying about your basic survival needs, you're having to make these small adjustments. And so as of right now, I think that's why Amazon has done so well to this point. But yet again, you're still seeing some weakness in other avenues. But even with that being said, Apple came out. They barely beat, but again, they are seeing huge declines in revenues over the past 3 quarters. And something we've talked about, and something I've talked about, is yes, they are much more of a desirable product than anything else, right? Like, it's not really a need. Yes, you need a phone, and you may need a laptop, but ultimately it's one of the high-end luxury items that you don't really need. And if people don't have to upgrade because they can't afford it, people aren't going to do that. So Apple is going to take big hits on those things because of that. But again, this is also why it had a ton of excess cash for times like this. And so, being said, Apple took a huge hit on Friday, and understand that carries a huge weight in the overall index. And so that it started coming down quite a bit on Friday. We're gonna have to see how it opens up on Monday. But again, it's there's a mix between the big seven. Two of them did good. Google did fairly good for the most part, and then Amazon did pretty well. So those two out of all the rest of them are really the only ones that did like phenomenal. And again, expectations are still low, so you have to keep that in mind. So all these things given, you still had two that were okay, but that's not enough to hold up the market. So at this point in my opinion, what I've seen in my experience in the market is that the market is essentially going to make its decision now. After this week, the market's going to start doing whatever it needs to do and correcting where it needs to correct. It's got all the information it needs. There's going to be plenty of earnings all throughout the remainder of the quarter. That's just the way it is. As earnings are announced after the quarter, it's just the bulk of the earnings. The industry leaders is what the market is concerned about. And then understand something I've always talked about is you have like 3 to 4 weeks after earnings where you have a natural pullback on these stocks. You get the run up before the actual earnings. And then if they do extremely well, if the market's doing really well, you might get another week on top of that. And then the market corrects like 3 to 4 weeks after that. And then it gets ready for the next earnings cycle. So that's essentially how the earnings cycles typically work. It adjusts a week or two. It really just depends on what the market sentiment is. And so as of right now, we can look at some of the other aspects that we're talking about that add to that market sentiment, and that being jobs added. It's coming down to 187,000 versus 200K expected. So it's starting to pull back. Again, a lot of the jobs that have been added have been a lot of temp jobs people don't want. And to try to go to these jobs and work these jobs, you have to work 3 or 4 of them to ultimately just break even. And so that's what people are doing, is just try to survive at this point. And then given, yes, inflation is coming down, so that is helping some, but then ultimately understand it puts you still in a bad bind because you can't leave your home and purchase another home because, again, you're not going to qualify. And if you coming to vehicles as well, you can't go out and purchase a new vehicle. It doesn't matter if it's new or used because you still have to be able to qualify for a loan. And right now, the banks are still really tight and the interest rates are still really high. So it's extremely hard to get a loan in the first place. And then with all that being said, over the past week, we also had Japan unscheduled emergency bond buying twice this week. Twice. And so that is what is really interesting, is that they typically do buy bonds. And I think right now they are really trying to prop up this market. And the last time we saw emergency bond buying, the market essentially corrected quite a bit. And not on top of all that stuff, I didn't even add this, but we did have a credit downgrade this week. Our credit was downgraded from AAA down to AA this week. And that is something that I warned about a couple months ago. If you follow me at all, a couple of months back, when they were getting close to the debt ceiling deal, we got our warning shot that the U.S. needed to do something or else they were going to lose their credit score. Now, what does this ultimately mean? This is something that is extremely important because, like any kind of loan, to be able to qualify, you're going to get worser rates because your credit isn't prime credit. But who is going to pay the bill for that stuff? That's still going to affect you in your loans and your auto loans as well, because of the fact that the U.S. can't essentially ultimately get better loans and stuff. And so that trickles down. All these things are more of a trickle down effect on everything. So you have to understand the way this is going to work. And so it's going to take a while for us to get out of this, but ultimately understand that this strong and resilient that we're talking about, yes, we are not at this point. But we've also seen monetary policy just last week get bumped to another 25-point basis move. The Fed have been talking about potentially having another 25-point basis move in their back pocket. They want to leave that option open in case inflation starts to run again. And there's a strong possibility it could, as some energy is starting to pick back up. And that's concerning. If you got commodities and energy that are essentially starting to push back up, that is going to cause some major issues and could start running inflation back up. And if we have inflation, that means the Fed is going to have to continue to hike. And what does that mean? That's going to mean there's going to be a lot more pressure that's not already on, because it's already breaking a lot of stuff just outside of banks now. And just last week, we still lost 2 more banks. So let's not forget that we are still in a banking crisis. That has never ended. But yet you have media and everybody telling you that we're in a new brutal cycle. The banking crisis is over, all this jazz. That is not true. And because you're seeing this, and this is why I like looking at earnings, because it's telling you what's actually going on. Now, there is some spoofing, right? There's some pencil whipping, but not as much, right? The closest to truth you will get is through the earnings, because they have to report essentially their earnings to investors. And so if they want to get funded, you got to be honest and give true numbers, or else investors aren't going to want to invest in you. So nonetheless, with all that being said, we got a big week on deck when it comes to scheduled events. We do have the core CPI, and we do have core PPI this week. We are looking to see what's going on with core, if it's going to continue to come down, and then go from that point. Again, you have to understand also that there's a lot of hidden inflation, and that's what people don't talk about is understand that with given that the rate of inflation that has gone up, ultimately, so your taxes and so your HOA fees, your condo fees, your insurance, all just gone through the roof. And thanks to all these increases, right? Not only in inflation, but now it's bleeding over into now interest rates being high, so that affects other things as well. So even though your food or whatever the case may be, some aspects may be coming down, you're paying 3 times as much for something else, and that's the way inflation works. And so, being said, we do have those this week. Again, it may show another big decline. It may try to pop. Again, we are getting closer to that 2%. So the closer we get to 2%, people are going to, again, claim that we are beat. Again, if for whatever reason it starts bumping back up, that, again, is going to be very concerning, because that's going to lead to the Fed to have to start increasing rates again. And again, something I talk about is what you need to be paying attention to is what the Fed is actually doing. They raised rates again. It's going to make things worse. And understand that by worse, what I mean is it's going to put a lot more pressure on companies that are going to have to cut fat. They're going to have to trim as much as they can to stay profitable. If they can't stay profitable, they can't be in business. So that's going to mean there's going to be more layoffs coming. And again, we're just starting to see that coming into other industries. And so you have to be very careful and mindful of that. Like I said before, is that their next monetary policy is until September 20th. So you've got quite a while before that happens. And then core inflation is again this week. Upcoming earnings, again, like I said, all the big earnings are pretty much done at this point. There's still some good earnings I want to be watching, just to try to give me more insight into some companies I'm watching, to make sure to see how they're doing through this recession. And then also, not only that, looking at some ones that have a big impact. We saw Yellow Freight. Now we have UPS this week as well. I want to see how they're doing this week. Monday we have Palantir. It's a big company I like with AI and security. So I want to see how they're doing on Monday. And then, like I said, Tuesday, UPS is good to watch just in general to see what's going on with delivery, as they're essentially like the backbone, right? Just like Yellow Freight was. They're the backbone to understanding what's actually going on behind closed doors here. And then you got UPST, which is a big one I want to be watching if we do start declining a lot. Any kind of loaning services, especially like with AI or anything like that, I'm really kind of looking at those. SoFi and UPST are really the ones I'm watching there. And then you have Datadogs kind of looking at that cloud environment structure there. Wednesday, we have Roblox and Disney, just kind of watching to see what's going on there. And then Baba. I don't really trade those a lot, but I like to kind of still keep those in mind, because those are still can be good plays. If my other 5 or 6 general ones that I'm really interested in, if they do and see where they're at, I kind of look at some of these other ones as backups as well. And then as far as expected moves this week, SPX is bumped up about 20, roughly around 20 points since last week. And then again, I think that's because of what's going on with the core. You have the core, so you got a big event that could impact the market. And so SPX will jump during that time. And so it's more easier this week to be trading individual stocks as opposed to SPX or the index. So keep that in mind. This is why it's good to watch this number. Tesla is still a little elevated, sitting at 13, I think, because we're at a really important level. If Tesla breaks where it currently is, could have a pretty big drop this week if it does. So I think that's why that's priced in a little bit more. BA is a little more elevated than normal. Again, it broke out of that channel it's been sitting in forever. We'll go over that. JPM is about normal. So that's pretty much what we got. Let's go ahead and kind of look at the charts here. So as you can see, we've been starting to pull high. So we're just barely off from all-time highs. Roughly around 5% from all-time highs, and now we're starting to pull back. So we'll see how far we get. Again, it's all about timing on this thing. This could be our high for this year, and we could start diving from this point. And something I also want to mention is that yes, we don't have monetary policy until the end of, closer to the end of September, but you need to realize what's going on here is that you got Jackson Hole at the end of the month. And then you got the G20 summit, which the G20 summit has been focusing on crypto regulation. So those are the big things you need to be paying attention there. And normally when last time when Jackson Hole was kicked off last year, that's when the market led to a bottom as far as like with major big tech before they had the big turnaround. So you had Jackson Hole, and then weeks later, essentially tech like bottomed at that point. So that's what I'm kind of looking for the next couple of weeks leading up to Jackson Hole, and then a couple of weeks after Jackson Hole, and then at that point, we may see a bottom roughly around September-ish, and then we'll see what happens there. But I think right now there's a lot of really big, impactful events going on, and we could get some information about some more banks going under. Again, we got a credit downgrade this week. You got other, I think, events that are going to occur between now and then, end of the month, and then we'll go from there. So, again, technical wise, when you're looking at this, we did break the 20 finally, and we kind of bouncing off this thing forever. The question is we're going to at least drop down to the 44.25, I think, this week. But the question is will we bounce or will we butter? And is that bounce going to be strong or not? If that bounce is not strong, I think we're going to at least make an attempt down to the 4,100 if we do break this level. So we need to break essentially the 4,400 level. If you can break that, I think you're going to make a good run down to the 42. And then it's all about, again, timing. If there are more events that start occurring with Jackson Hole and everything else, you could easily butter this, break the 200, and then you start floating around anything under 4K essentially at that point, which at this point, again, I think at this point we will be trying to price in a recession. Now, are we going to see new lows? I don't know. If you look at it from a weekly standpoint, we haven't made a new high, so this could be a lower low here, depending on how this plays out, right? This is the same move we saw during the pandemic, right? People were worried about the pandemic, then we bounced up, and then we did make a new low on the pandemic. But those, again, you have to understand those a very different scenario here, as there was more of a concern about the unknown. So we have, for like that 2 months after this pop, it just was nothing but red limit down, limit down, limit down, because there was so much unknown. I'm not saying that's going to happen now, but you may be starting to price in a recession, so you may start getting some more push downs. Are we going to make a new low? I talked about the normalization being roughly around that 3,200. I don't know, right? That would normalize everything if we could. That's fair value is roughly around the 3,200. But are we going to hit that? I don't know. There's still a lot of manipulation. We still got an election coming around the corner. If they can sell the market off in the next 2 months and then try to make some sort of recovery going into election, that would be ideal in my opinion. I don't know if that's going to happen, but I do believe right after this pullback is going to be a big boom cycle. And if they can quantitative tighten quicker, which I think they're going to try to do, this is, again, my theory here is that I think what they're going to try to do is raise it another 25-point basis move to put more strain on businesses to try to accelerate this process. They aren't talking again about any kind of cutting on rates until next year, but I think they're trying to accelerate that because there is rumors. This is how they do. They like to test waters with rumors about what could potentially happen. Then about a month later, it starts to happen. So maybe they put on another 25-point basis move here in September. And then to add to that, maybe if that doesn't quite do the trick, maybe what they'll do is Japan will come out and start increasing their rates and worrying about inflation. If that's the case, that could be the nail in the coffin that will absolutely obliterate the market and force them to have to force the market to drop and having more layoffs at a quicker, faster pacer rates, as opposed to holding us at extended period of time on high rates, because again, you got an election next year. So keep that in mind. So these are things that we have to keep in mind that could potentially start being played out in the next couple months here. And that's what I'd say, like more so like in the next 2 months. If you try to capture this in the next 2 months, that'd be ideal. So you're set up going into that next year election. So with that being said, this is where we currently are. There, as you can see, there's a lot going on, and coming into this week, I think we'll still at least get the pullback to that 4,300. I think again, if we can break through this and how well this is supported, this 20 and the 50 EMA on the daily, I think or on the weekly is really going to determine how quick we can come down. We could hit this and then bounce since we haven't touched it in a while. Typically, that's a normal move. You'll hit it and you'll get some sort of bounce. And considering we haven't touched it in a while, we might get a pretty good bounce. Will we turn over and continue selling is the question. But that's what you're watching there coming into this week. And then let's go take I don't want to look at the hourly. Let's go to the daily. We're going to go over to Bitcoin real quick. Again, my biggest concerns when you are talking about Bitcoin is it's held underneath the 41K mark. I really think this thing is going to correct back down. I don't think it's not disconnected from the market just yet. I think in the next cycle could bring on a strong possibility of that, as I do believe this will be the bottom to buy, as we will run into a big cycle. And if my thesis is correct, we'll price in a recession at some point before the end of the year, and then at that point we'd be in a complete boom cycle going into the election. Would line up perfectly. So we'll see if that happens. Also lines up with the Bitcoin halving as well for next year. So I do believe you get one more strong pullback. Again, I think the G20 summit, if there's a lot of regulations on there, it could very well correct this thing back down to new lows. So you have to keep that in mind. There's been talking about world regulation, and that everybody would have to comply with that going into the end of next year. So we'll see if that's true or not. Again, a lot of rumors. They like to kind of feel out the room before they start actually applying some of these things. So we'll see if this is true or not. But we'll see. I know Gary Gensler wanted Coinbase when the original, about a month or two ago, when Gary Gensler came out and was suing essentially Coinbase. He wanted, as far as the security aspect of a lot of the different coins that are out there, cryptocurrencies. He was essentially saying that some of these ones, aside from Bitcoin, that Coinbase needed to block all of them but Bitcoin. So again, we'll see what happens in the G20 summit. I think it's going to be very important when it comes to cryptocurrency. And then I think obviously the banking side of it, Jackson Hole is going to play a huge part of that. Again, we still have a lot more data to get through before then. I think a lot more is going to come out before then. So we'll see how this does play out moving forward. So that's Bitcoin. Tesla's actually starting to pull back. Again, it had this monster move up. A lot of tech just had these crazy moves for 2 months. So I think this thing, correcting down to at least roughly around the 200 might be, again, not financial advice, might be a good area to start buying Tesla. Roughly around this 200 right here is my concern. If we can blow through that, I think this level right here ultimately is what we're kind of looking at. That around that 200, 210 mark. If we can hold that, then that may be the bottom. This is one thing to watch. When Tesla comes down, if it comes down to this level, which I think it will, and see if it holds. If the market starts selling off heavy and this thing holds here, this could be the bottom for the next upside. That would at least correct us down 50%. You want it for any kind of more bullish move. You want this thing to at least correct down to 50%. So as long as you can hold there, that could be correct, or it could be like I've stated before. It could just be a new low, just depending on how you're looking at this, because this up here, we never quite reached that 318. If this thing starts really pulling back, it could make a new low, and we could see under 100. Again, it all depends on the timing of events. Anything is possible, but again, it really is dependent on timing of events and what happens over the next couple of months. So with that being said, that's what I'm looking at for Tesla. I don't expect it to break over the 263 again. I think we're going to get a break on it at the 250 here this week, and then attempt to run for this 220. So 220 might be a good entry, and then kind of just averaging down at some of these other levels here if we continue to fall from grace, or we are going to start pushing up. So again, even though Tesla is hurting a lot, there's still it's still one of the best companies. And like I said, during times like this, you want to be with the best companies. You don't want to be with a lot of speculative companies, because of the fact that is very trying times. And if they don't have enough cash on reserve, they're going to be in trouble for the most part. It's not saying they can't get acquired. A lot of good companies get acquired by some of these bigger corporations because of what's currently going on. But again, we'll have to see how this does play out. So kind of really watching those levels there. But ultimately, I want this level here, and then maybe even 160. If we start dipping down below the 200s, maybe 160 is where that's at. And then again, if we break that, then we're kind of looking at that 110 mark, roughly. I think to get back down to here, I remember that last huge bull run before Tesla went absolutely absurd a couple years ago. You had much of a similar move where this thing ripped up like this pandemic move, right? It ripped up, and then it just tanked even lower, right? It was like in the 700s, and it came down to 700. And then it held there for a bit, coming from like 1,000 or close to 1,000, and then it broke that and it went all the way down to 400. So you have to be careful on some of these. And again, it's all about timing. So you can't really, this is why timing is hard. So DCAing is a good, especially if you're looking to do for a longer swing trade. And that's what I'm kind of looking for. A lot of this stuff is a longer swing trade out of this. Because I think you're going to find some good bottoms. And like I said, after this recession is priced in, I think you will get a huge boom cycle. I would imagine that quantitative easing would occur at that point as well. And then that would cause a huge run in the market. Again, the economy, I don't believe, is going to be that way. But the market reacts the fastest compared to a lot of things. You have to also understand there's a lot of people that are sitting on the sideline with cash, a lot of institutions that have been sitting out and weren't expecting this move. So when they put their money back into the markets, people don't want to be holding cash. They want to be holding assets. And so you have to keep that in mind. This could be a huge boom cycle after this. And again, I think after this pullback, you're going to see that. And then again, the economy is still going to be affected pretty heavily over the next couple of years because of this. But ultimately, understand that this is where the wealth is made, is when stuff like this happens. So on these cycles, UPST, I want to bring some of these ones up that I'm kind of looking at coming into this potential downside. Again, this monster rip. This must be one of the biggest rips out of all that is currently going on. I think this is like a $400 or 400% move. It's a huge move, a 550 by 550 roughly move, almost straight up over like 2 months. So again, I think this and SoFi are going to be some really good ones, especially with people having problems. People are going to need to continue to get loans, and so especially when you have AI behind it, I think this could be a really good one. This is why I really like this one. I'll see how far this one comes down. I think if we get it roughly around 36, will we see it back down here around 20? Again, it all depends on the timing. If things get really bad, maybe, but maybe not. We'll have to see. Really watching it around that 40 mark, see if it comes down even more than that. But when I do want to watch Palantir, again, they have earnings on Monday. I want this thing to try to pull back. We'll see if it can get down to 12. Really watching that 200. Normally that 200 reverses these a lot. So depending on the market of the sediments, if this can butter through this, that's definitely a bad sign. If it butters through 200s on a daily, if it does, then this thing could potentially come back down here into the 8s. I'm not really sure how plausible that is, but we'll see what happens there. So kind of watching that there. It did gap fill, so we'll see if on Monday, if it has good earnings, we'll see if it can pump back up and break 20. Again, if it has another profitable earnings, the next step is people talking about it joining the SPX, and if it does do that, then institutions will start having to buy it or have some on the books. So there will be some buying. So that's something we really want to keep an eye on if that does start to happen there. Riot is one I do want to watch. I do like SQ or Square as well. Jack Dorsey, they just bought they made a bunch of money off of Bitcoin. As he has been helping out Square in that aspect. I do like PayPal as well, but Square as an interesting one. And I think between Square and Riot, if you want to really kind of get into like, you don't want to actually invest in crypto directly with buying crypto, I think these two would be better ones to invest in if you're looking for a different or supportive companies for cryptocurrency. So actually having to hold crypto. So I think Riot could be another one. It's a very strong possibility. We'll see if this comes down. Again, watching it is starting to break. I think, again, it could get down at least 10. Is it going to get lower than that? Again, it depends on market sentiment at the time. So that's kind of the level watching there. SoFi, this thing sells off pretty quick. And you need to see if it's going to hold the 8.1. If it breaks down there, I'd really like it down here by 5. But again, we'll see. Depends on market sentiment. If it can break roughly, watch that 200. If it could break that 200 moving average on the daily, roughly around 7, then I think you got a strong possibility you can get it even lower than that. But we'll see what happens there. And then ultimately BA, let's get at some of the ones we normally watch. Again, this finally broke out. Let's see if it can actually break the 215. Again, it took forever to break this. This may just pull back to here and then start ripping again. If you want to keep up the market, you definitely want value in banks to continue ripping. It could be a strong possibility. We may not see a heavy sell-off. We just might. We don't know. Ultimately, understand that if the market doesn't start pricing in a recession until it starts cutting, that means things are really bad. And right now, things are getting really, really bad. It's just how much more bad does it need to be for the Fed to start cutting? Again, they hesitated when the first couple of banks started to break. So we've got 2 more failures. Again, a lot of the loans, emergency loans the banks are using, that's been riding up higher than normal. So you need to keep an eye on that stuff. I think we're on the verge, we're on the cusp of some really, really big news actually occurring that could cause the Fed to emergency start rate cutting. If that's the case, then you have to start watching bonds as well, because bonds are going to explode if that does happen. So that would be one of the next moves to watch as well, if that does happen. So BA, really watching that level there. JPM, same thing. Had a lot of consolidation. You really want to see if it can hold the 142 here. I think it will pull back eventually down to there. And then we'll see if this holds. Again, depending on the set of the market, can it hold the 200 or is it going to break? If it breaks that 200, then we're coming back down to potentially lows again. So that's something that's really what I'm kind of watching, is when the market starts getting back around that 200, which I think a normal healthy pullback will at least be close to that 200 on the daily. The question is if it's that bad and breaks that, then that means we're going lower. So those are things to keep watch, especially on the industry leaders. If they start breaking that, then that's your sign right there. So with all that being said, I hope everybody has a great rest of the weekend, and then I will see you guys on the field.